This is your LMAX exchange technical update for Tuesday, October 31st, 2017. Euro dollar. So the euro has broken down and triggered that neckline of a head and shoulders top formation that could project weakness all the way down to 112.30 over the coming days and weeks. It'll be interesting to see how the market responds around current levels. We did get a close on Friday below that neckline, which does increase the bearish prospect. And so for right now, any rallies should be well capped in the euro and really only back above what is that right shoulder high, which comes in at 118.80, would compromise the current bearish outlook for euro dollar. Sterling dollar. So cable continues to chop around following a recent pullback off the 2017 high. The market was supported on a dip just ahead of 130, and right now we need to pay attention to 133.38 above, which is a recent high on the 13th of October, and 130.27 below that 6th of October low for clearer directional insight. Dollar yen. So dollar yen has recently stalled out yet again by a familiar range high, which is at 114, 114.50. The market this year has continued to be locked within, for much of the year, a range trade, and so this most recent rally up towards and above 114, just shy of 114.50, has once again been capped ahead of this latest reversal to the downside. At the moment right now, if the market breaks back down below some support, which comes in all the way down at 111.65, it would do a good job of strengthening the prospect that the market is going to continue with this range trade, exposing a deeper drop all the way back down towards the range lows. Really, at this point, only a close above 115 would compromise this outlook. Euro Swiss. So Euro Swiss has recently put in a 2017 high up above 117, and the market has seen a bit of a pullback off that level, with technical studies looking a little bit extended on a short-term basis. But medium and longer term, the structure has shifted to the top side following breakouts above 110 and 112 in 2017, and so any setback should be ideally supported ahead of 113 into the 114 area ahead of the next major upside extension beyond 117.13 and towards that 2015 base that was in place at January of 2015, that major psychological barrier at 120. Aussie dollar. Aussie dollar has been under pressure over the past several weeks since putting in a 2017 and plus 2-year high above 81. The latest setbacks that we have seen and the breakdown below the 77 area has now opened the door for this next measured move extension into the 75s. Look for any rallies to be very well capped here, ideally ahead of 78, though only back above 79 would compromise the bearish outlook. Dollar CAD. So dollar CAD has pushed up through that major August high at 127.80, extending its correction in 2017 out from a plus 2-year low down just shy of 120. Look for the market over the coming sessions to potentially consider extending this run up towards a test of that psychological barrier at 130. Kiwi dollar. So the New Zealand dollar has recently come down to retest that low from May, that 2017 low from May at 68.18 in the previous week. The market is looking a little bit extended on a short-term basis, and so there is risk that we see a bit of a correction higher. Overall, though, rallies here should be very well capped ahead of 71, with only a breakback above 72 to compromise the bearish outlook. S&P 500. The SPX 500 has rallied up to another record high in the previous week, and the market has shown no signs of any let-up just yet. It will take a breakdown and a daily close back below 25.44 just to take the immediate pressure off the top side. More realistically, the market would need to break back below 2,500 to suggest that we could be seeing some form of a top. Gold. So gold setbacks have been very well supported over the past several months despite some intense declines, but every time the market has seemingly put in some form of a base or higher low in favor of a fresh upside and fresh yearly highs. Most recently, we put in a 2017 high at 13.57, and look for this latest round of setbacks to now be well supported in favor of the next major upside extension back above 13.57 and towards a retest of the 2016 peak and a break of that peak at 13.75 further up. Only back below 1,200 would compromise the constructive outlook for gold.